Happy Friday, and holy cow, what a great day in the markets. I want to show you what it is that I think is important from what Jerome Powell said and why I think from here we could have some green lights. So I'm going to put up the transcript from his speech today at the Jackson Hole Symposium, and then I'm also going to show you the CME FedWatch tool, how that was impacted by that speech, and then also what the market looks like there. SPY, QQQ, IWM, a really cool thing about Bitcoin that's happening right now. It happened today, as a matter of fact. I need to show that to you. And then, of course, NVIDIA. I'm going to keep doing those NVIDIA updates through their earnings. And if you have not seen my video for my NVIDIA stock price prediction and earnings projection through the end of the year, you should most definitely go and see that. And I do put in that my predictions for the next 12 months from here, where exactly NVIDIA can go. I think you're going to like what you see for that. So guys, let me pop this up here. This is the transcript from the Federal Reserve's website itself. So this is the official release for it. And I've highlighted just a few things in here. And the very first thing, I remember he just started talking. And as soon as I heard him say this, I sent a message over to my community members at my Discord. Link for that's down in the description. If you want to see my buys and sells, talk to me and my community members throughout the day. That is down in the description for you. Just click and sign up for that. And then when you see the tech analysis, I got a course link down in the description for that as well, with a coupon code, a discount code, Doctor. You have to check that out as well. I'll get more to that later. In the meantime, biggest line here, the balance of risk to our two mandates has changed. The balance to their mandates has changed. So they have two mandates, a dual mandate they call it. So one of them is stable prices, and so that refers to inflation, which means that that was balanced for them for a long time, since at least March of 2022 was the time that we really started seeing them really start to hammer down on inflation, doubled down when August of 2022 came around at the Jackson Hole Symposium. And this is like the opposite message that they're doing now. Rather than paying any attention whatsoever to inflation, they're like, inflation's good. Job market, we better put our attention over there. Now, in light of that, in paying attention to stable employment, which is their other mandate that they have, it sounds right now, based on the rest of what I tell you here, which is what I'm going to emphasize, not so much the inflation part, because it sounds like he's not emphasizing the inflation part. More of that is like making the case for why they think that inflation is going to stay on a steady decline back down to their 2% goal over a longer time period. So we'll see that happen. Labor market's getting their attention right now, and he's not going to panic and be like, oh gosh, we waited too long, oh no. Instead, what I think he's signaling is Goldilocks scenario, that he's saying that, hey, we got a soft landing coming our way. We got this, guys. It's like a voice of confidence, if you will. And the market's going to love the confidence. They're not going to like the fear, uncertainty, and doubt. So with that confidence from Jerome Powell, even if it is fleeting, at least for right now, it sounds like we can continue maybe a little bit higher from where we're at right now, maybe even new all-time highs. We're going to have to watch for that. But what I will say, there are other concerns that are out there for the market. This isn't like, hey, our worries are gone and let's go full-on bull run from here. There's always possibilities for a lot of things. This is just as far as the Fed is concerned, and that why the market rose up today is that it signals soft landing. But let's move on from there. He says, my confidence has grown that inflation is on a sustainable path back to 2%, which they said that when they had that confidence, they would do the cuts. That's the key line that's in there, that the rate cuts are coming. The rate cuts are coming. The rate cuts are coming. So let's move along. That's the second time I've used that reference this week. The once was with a history teacher in Earshot, and she actually said two names. One name was Paul Revere, and if you guys know the other name that's associated with that, let me know. Apparently, maybe it was Paul Revere's actual name. I'm not sure. Let's move on. The labor market has cooled considerably from its former overheated state. Yeah, we know that. Unemployment rate is still low by historical standards. We know that as well. Now, it is low by historical standards. So what that does, this puts like a bullseye on any labor market data that we get. So recessionary data is still going to have our attention. So if anything comes up, durable goods orders, by the way, are on Monday. And then we also have employment data coming up early on in September, including the next unemployment rate, August unemployment rate on September the 6th. But what we're looking for that is that it stays historically low. So we can stay at 4.3% is what it sounds like, at least as far as what the Fed is saying right now. And we're okay. Things will be fine for us. So if there's that increase in the unemployment rate, still a negative thing, because that actually makes us lose confidence in the Fed. And we're like, oh man, we really are going into a recession here. Look at that unemployment rate drop. Or I'm sorry, the employment rate drop, the unemployment rate spike, right? Skyrocket. So it does put further emphasis on those jobs numbers. It keeps them in line as catalysts. So like if it's initial jobless claims, if we stay status quo with that, or we see tighter labor market conditions, either one of those things is absolutely fine. The market's not going to check those and balk at it and drop back down again. In my opinion, either way, it's a green light. It's an even better green light if the labor market conditions tighten a little bit. If we get a drop in the unemployment rate instead, the market's going to go bonkers. Absolutely nuts. So you guys can put that on your calendar. You can mark it down that I said that. I really don't mind. Let's put this back up here. So moving on from there, there's a really big line that we have in here that I want to make sure that I point out to you. So the current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So the current level of their policy rate, it's way sky high right now. In other words, they got plenty of room to cut from where they're at right now. To me, that says that they're willing to cut aggressively if things start to get too loose in the labor market, that's going to be like drop of a hat. So if we get dropped back down to a bottom, especially with like IWM, which is the Russell 2000 ETF that drops the small caps. If that's the thing that causes that to bottom, giddy up. And then especially we double down on that case if stimulus starts to get talked about, any whiff of stimulus following that cut. And that is going to be huge. That's going to be enormous, especially for the small cap stocks. So that this could mean if we see that further weakening that they say, and they say they have plenty of room to do something about it, the Fed's going to get aggressive with that drop. There could be some negative things that happen in the market as a result of that at first. But like I said, if it's to a point where stimulus comes around, it's going to be like candy raining from the sky, if you know what I mean. While that money comes down, it's more like gumdrops to us. So let me put this back up here for you. That is a really critical line that he put in there. But the language in here sounds like the Fed is coming off nonchalant about this, that they're not trying to cause any sort of panic, that they're signaling, in my case, Goldilocks and soft landing. But so that's the way that I interpret it. You guys are welcome to have your own interpretation. You're welcome to share that down in the comments. That's fine with me. So moving over, trading economics. I'm actually going to get to the CME Fed Watch tool, but there's the durable goods orders coming at 8:30 a.m. on Monday. And just to scroll through here a little bit, for some of the other things that we have coming up for us, core PCE numbers, 8:30, and as long as they stay like we expect them to, Jerome Powell kind of told us, we're not really looking at that so much anymore. If that is the case, that they're not really looking at these inflation numbers so much anymore, as long as they're not wildly back up where they cause a resurgence of inflation fear, that would be downward pressure for the markets. But if they're status quo numbers, if they're pretty much near to where they're at right now, if they stay on trend, or if they soften a little bit more, not to the point of deflation, that'd be bad. But if they stay disinflationary, 0.1%, 0.2%, maybe even 0.3%, I think that we're in really good shape. Moving on from there, ISM data coming up on Tuesday, September the 3rd. Also going to be big for us. Let's move on. JOLTS coming up on Friday. That's going to be huge for us, by the way. Put that on your calendar on Wednesday, September the 4th, we want to be watching for that. More ISM data coming up on Thursday. That's going to be a big week, that first full week of September, because September the 6th is when we get non-farm payrolls and unemployment rate. Forecast is looking pretty soft so far for the payrolls. That's lower job markets, job openings. That would be something else, or I should say people on payroll. So that would be something else. If that were to contract more for us, that would be downward pressure for the market. That'd be that further loosening that we would get, which that wouldn't necessarily, if it's not loose enough for the Fed to do anything, that's also different. Unemployment rate, we want to see that the same or drop. Either one of those two things is going to make the market go bonkers. Just so you know, like 4.3%, okay, not bad. We didn't change. We're not seeing it wildly go out of control. If it pulls back to 4.2, 4.1, I'm telling you, that Friday is going to be a very green day, in my opinion, if that unemployment rate pulls back from the 4.3% that we see, because then it's like, oh, it was a fluke. Guys, it was a fluke. I think that we would see new all-time highs in SPY, the S&P 500, I should say, the NASDAQ 100, Russell 2000. Like, we're going to have to see how it progresses from here, but it's even like there's a small possibility that we even see that 10% push from current levels. That would cause us, if the unemployment rate came in lower than 4.3%, that we could see it push up even higher. So over to CME Fed Watch tool. And we'll get to the charts in a moment, and I'll make a bigger deal of that. So just looking right now, this bar right here is for a 50 basis point cut in September, and that's 50% higher than it was. It was only at 24 yesterday. Jerome Powell spoke today. 50% higher, 12% higher chance than what it was before. It went from 24 to 36, and this one went from 76 down to about 63. Either way, it's been known for a while that we were anticipating a cut here since at least the middle of August is when we've been looking at that. Now we're moving on to the end of August here, and even though it's bouncing around a little bit, it's like 50 to 25. I think either way we're good. I think either way, I don't know if we would get that. If we get good numbers for inflation and we also get good numbers for tightening conditions of the labor market, that they're not falling to pieces, we're probably at the 25 basis point. If we do have softer data for that labor market or looser labor market data, that could lean us a little bit more towards 50 basis points instead. We're going to have to see how that pans out. All right, guys, it's been long enough. I want to get over to the charts because a lot of you, that's what you've been waiting for. Now, I will show you the clean charts with none of my drawings on it. I will put the technicals up as well, but I do also want to let you all know, if you have been watching my channel, I'm going to redo these technicals because, well, first of all, I think I can deliver them in a cleaner manner and still be like I've been dead on since I updated the way that I approach these technicals. I'll show you further evidence of that today, especially with IWM and Bitcoin. But also, I mean, honestly, it's been pretty much every one of them. I'm not trying to brag about it. Honestly, they're so spot on. Like, I'm a little bit afraid. Like, from a trading standpoint, it's something that I'm like, oh my gosh, like. It still hasn't been long of a history. I've tested it. So far, it's held up every time, and it keeps on working out in all of the charts that I track, all the full technical analyses that I do. All right, enough of that. I'm just excited about it, guys. Like I said, if you want to see my technicals before they hit YouTube, there's a link down in the description for the Patreon. Click on that, sign up, head on over to the Discord. You can talk with me, my community members, see those technicals, see my buys and sells. And then if you guys want to learn about technical analysis trading, there's a link for that down in the description as well. It's the Stockmo Academy course, teaches the bread recipe. I 100% endorse that recipe. And the technicals that I've started innovating on, they would just extend onto that bread recipe. It actually strengthens the bread recipe from what it was at. It's a nice like cinnamon raisin bread with extra glaze on top or something like that. It really is. It's smooth. It's easy. The course teaches you how to set it up. It tells you all the things that you're looking at. There's a Discord that goes along with it. Use the code word doctor when you sign up. It's going to save you a ton of cash. All right, here we go. Into the charts. So we're looking at SPY, nice and clean. Daily chart, zoomed out. You can see that we're getting close to that peak. Expect a rejection if we get there. We're above this blue 50 SMA that's on here. Let me take off some of the other mess. We're above the 50 blue SMA, and we're also above this yellow 200-day. That's a bullish scenario. The momentum is not overbought on this. We cooled off when we sold down this way from the overbought status that we are from the previous all-time high. Now we are really, really close to it, and we're only about in the middle of the RSI band. That's a great place to be. And so let me put the drawings up. It's going to get real messy for a second, but I'll change the level of zoom. Oh, gross, ew. So for this, let me move this. This is why I need to update it, because all these downside technicals that I have, that was all the way back here when we were looking at this. Let me see. It was actually Monday the 12th. Nope, even farther back. These technicals were done this week. The Monday of the 5th throughout that week was when I was cooking up these new technicals. And it's just time to move them. So it's kind of like a football game. We're getting into NFL season. Move those chains, right? So we're getting close to moving those chains. Let's talk about the price targets I have on here. I have 556. We hit it. We sold off a little bit. And then today we recovered it. We tested out again. Honestly, this price target I think is soon on our way. If Jerome Powell really did lead on to that Goldilocks scenario, this 582 could come in for us. Like, I don't know that we're straight there. I still think that that's an end of year number. That's a lot of movement up from where we're at right now. I think it's still a reasonable amount though. I think that this is a very safe end of year number, assuming that the market doesn't just fall through the floor between now and then. So that's what I got for you for the SPY. Over to the Qs. Let me zoom way out on this as well. We'll reset it so it actually zooms out with it. We have still a lot of ground to recover on this. And this peak over here is likely going to cause us trouble. It looks like it already did. About 486, 487. So that one is one to pay attention to. We got to get up above that. Honestly, I think we're going to jump up over it. We're going to sit on it, and then we're going to try and take on this previous peak. That's what I see coming for us for the Qs if we're really in that situation to climb higher from here. So if I'm right about it, and there's no guarantees that I'm right about it, let me make a mess on this chart. And like I said, it's time for me to clean up those technicals and to reissue them with the price targets move, because these low ones were about a week into the carry trade, and it's just time for them to time for them to move. So let me zoom in on this, and we'll show what exactly I want you to focus on here. So to get a little bit cleaner, even though it's still messy, I said watch this for support. So far, we haven't really needed this support that's down here, but check it out. For this price target did move, by the way. I did have it lower, but then we hit it. I think I had it around 463, 466. I'd have to go back in my videos and see. But we broke it. I moved it up to be closer to this 487. Well, after moving it, well, we hit the 474 as well. We even hit the 487. We hit that yesterday. Today, we hesitated right in here, right around 480. But I said that was going to be a mess. Now, mind you, the Qs could be waiting on NVIDIA. Honestly, like, let me go back to me. The Qs, QQQ, the NASDAQ 100, I think it could totally be waiting on NVIDIA. That's a big catalyst coming up next week. Like I said, if you need to see my NVIDIA stock price prediction, my NVIDIA earnings projection through to the end of 2024, which is their fiscal year 2025, by the way, that link's down. And I'm sorry, that's one of my previous videos. Just go back into my videos and look for the one where I have the NVIDIA stock price prediction in there, and just check it out. It's like a 30-minute video, but it's jam-packed full of information and reasons why I have the case that I have there, like evidence-based reasons why I think we're going to go up from where we're at right now, and you guys can see just how far. So back to the charts here. So for this one, I think we're going to revisit 487. Like I said, we could be waiting on NVIDIA. So let's assume that NVIDIA doesn't hold us back. 500 is probably just going to happen. We're probably going to take over that all-time high that we got back in here on July 10th or 11th. Which one was it? 10th is 503.52. That's the one. So it was on July 10th. Got that high. NVIDIA is going to be that thing, in my opinion, that's really going to give the Qs permission to either become a rock star and hammer on higher from here, or it's going to be that thing that's going to push us down and like smash through these support levels that we have on here. So green for support, red for resistance, just so that you're aware of the little bit of coding that I have on here. I think it's a very reasonable coding. Price targets if we go up, green. Price targets if we go down, red. The next one's IWM. So check this out. This is the monthly chart that we're looking at, and you can see that sort of climb. It looks like it's this straight linear path that we have that's through here, and honestly, it kind of is. Squint your eyes. It's about to get really ugly because I'm about to show the drawings that I have on here, and it's an utter mess. You can hardly read it, but I'll tell you what to look at specifically. So I know, yeah, there's growth up here in orange. I said massive bull channel. That's what you're looking at. That's all of this stuff that's in here. It almost entirely exists between the white diagonal lines that are on here. Anytime we get down to the green, that's a time that what we had for the Russell 2000 stocks for IWM was an absolute rocket ship besides the pandemic, but that hit the 200 month, and that was the biggest rocket ship we've ever had. So if we get that weakness from the labor market, if we get signal of recession and the market starts to go into the crapper for some reason following all of that, and we see IWM just turn into a complete waste, guys, remember that monthly chart that I just showed you with that massive bull channel? And if things went really, really, really super bad and we came down to that 200 month, oh my gosh, like it probably put in some incredible like opportunities that we didn't think we'd see again since the pandemic. That's how big it is. So let me put this back up here. That's the monthly chart. Yeah, it's gross. Yes, we're in a massive bull channel. We're currently up here in the red, which is where we get sells. Even most recently, the last time we got to this first red line, we had sells. The only time we broke over that was when the federal funds rate was cut to 0 and tons of economic stimulus got flushed out. Now, mind you, neither of those things are happening right now. Let me say that again right here to the camera with you. We have the Fed cutting rates, but the rates aren't at 0. We also don't have massive governmental stimulus being thrown at us either, with the market going absolutely bonkers. Yes, the market is up right now. We are missing the low federal funds rate, and we're missing the economic stimulus, and we're still up near that. Guys, I think whether it happens in a straight shot or it happens after the next big old tumble, I think we're putting in new all-time highs with the Russell 2000 stocks. I think it's coming for us, and so we just need to be watched for where exactly that happens. We got to be watching for those signs of a sell, or maybe we're watching for signs that we're on the way there right now. Let's put the technicals back up so that you guys can see it. So I'm going to switch down to the daily chart, and we're going to kind of pick through this mess a little bit. And there you go. It just got worse. So check this out. I shared this. Whoop. over at the Discord. So a few things that I want you to see. One, I think that the Fed is signaling in ways that allows us to move back up to this red line. Expect to find some sort of big resistance. It happened last time. It's probably going to happen again. This support area that I have down here in green, we're not necessarily out of that support area yet. Yeah, we're a little bit above it, but what we don't have is we don't have a ceiling up here at about 221, and we don't necessarily have a floor checked for us yet since we were all the way back here on Thursday. So we could go higher, but if we go higher and we find out at 221, 222 that we hit our heads, which mind you, we hit price target 3. We nailed price target 3. I said 220. We closed today at 220.38. I missed it by 38 cents, which is funny because I missed my Bitcoin one a day or two ago by $38. Ooh, lucky number, I guess. Maybe it is 38. So hit price target 3, guys. I put in a price target 4. A price target 4 based on what the Fed had said today, assuming that the market stays bullish on this stuff, assuming that we head higher. I think we're going to take out the little bit of resistance here. I think we're probably going to take out this this trend line that we have here from the bullish channel, and I think that we're going to revisit that 228. Over to Bitcoin. Big news on Bitcoin, by the way. Look at that. Look at that candle that we got with Jerome Powell speaking today. Do you guys see that thing? Daily chart on Bitcoin. We are up over the 50 SMA and EMA. I talked about the rejections in my morning video. Well, I gotta say, what did Bitcoin say to Jerome Powell? I think they said, hold my beer. And then they showed us what that climb was off of that one. And man, it broke up over that. The 5 crossing the 50, probably gonna happen. If we're staying bullish on this, I think we can move up significantly from here. Let me put the drawings on. So, because you guys got to see this next thing. So back here, I called within $38. So like 0.05%. I called this peak that we had here with my price target 1. This one, when I looked at it earlier today, I was within 0.1% of this. That I don't remember the exact number that I had on there. It was really darn close to the 63,919. As a matter of fact, if we go down to the 30-minute chart, I can tell you what it was. That's the one right there. It was 63,856. So with that one, so $60, $63 is how close I was. So 0.1% was about how close I was with that. And you can see Bitcoin still loving it. And Bitcoin is showing us, I think, as we get into the weekend, that it's loving what Jerome Powell had to say. It's loving the idea of lower rates. It's loving the idea of just loosening labor market, but not much to worry about. Oh, by the way, price target 3, I think we're getting there. 66,187, and then we have resistance all the way up to about 68,000. So I think we're getting to price target 3. We hit that resistance. There's no shortage of resistance up above that with the previous peaks that we have up here. So if I were to put more of these bands on here, we just have a ton to the upside. And you can see from Bitcoin's history, it's had terrible trouble making it up over those resistances. This trend line is also important to us, that we need to make it up over that. So that's Bitcoin. Moving over to NVIDIA, closing out this video because I know I've gone on for a long time here. So with NVIDIA, check out that path that we've been on. By the way, I don't have it on here right now just because the crowd, actually I don't think I do anyway. We do have a broadening wedge pattern here. If NVIDIA goes into an absolute rocket ship, anytime that we hit that top trend line, and like I said, I'll put this on here, we actually hit it here and it just dumped all the way down to the carry trade, and it actually penetrated down through the bottom trend line from that ascending broadening wedge pattern, which by the way is a bearish reversal pattern. That doesn't mean I'm bearish on NVIDIA, but what that does tell us is that if we get back up to that top trend line, that could be a point where we start to take profits on that, maybe depending on what kind of trades we're in and everything. Now, long-term investing is different. I haven't touched my long-term position. I've only added to it over time. So for this one, for NVIDIA, we got to watch for that. Let me see if I still have it drawn on here. I do, although it's looking a little crazy. So there's the top trend line. So if we make it up here to these price targets, these price targets that I have for you, those are areas right there that could be trouble for us if that puts us up on that trend line. This bottom trend line right here seems to be an area where buyers are coming in as we come into that, kind of interrupting that. So you can also see what I have here in terms of support. And you can see more recently, this is a weekly chart, by the way, that we end up in this resistance band. Let's go into the daily chart and we'll see some more. Stretch it out. Let's reduce some of the noise that's on the chart in front of you. 125, nailed that one going all the way back to this day right here. It was on Friday of last week. And then I said 130 was the next one. Nailed that right here for this one. We actually, let me see, I think we closed at 130 that day. We did. Check out the resistance that's on here, by the way. We couldn't clear it. that confirms that what we have for this resistance band is really, really well drawn in there. So again, it's not an ego thing for me. What I want to know is that I have this right. I have this done well, so that when I share my technicals with my community, when I share my technicals with you guys, that when you look at it, you're like, hey, these are typically pretty good. So the more that I put that evidence out there, the more I have a history of it, the more that we know, I know, and you know that we can rely on the technicals that are being presented out there as part of something that would be solid due diligence. Now, it wouldn't be exhaustive, but it'd be a solid part of the due diligence that you would do. So like I said, for QQQ, by the way, I think we're waiting on NVIDIA earnings. It looks like we're still settling between 120 and 133, like I said, but we'll see because we still have 3 trading days prior to the NVIDIA earnings Wednesday, the 28th. So for NVIDIA, we made it back up above the trend line, which was downward off the previous peaks that we've had. And I think that might be where we settle leading up to those earnings, is sitting right on that trend line, telling us, hey, we're either going to bounce pretty solidly off of here and things are going to go wild, or we push down through that trend line and then we start to test those supports along the bottom. And it's probably going to drag the Qs with it if it does head downward. So just to put that out there for NVIDIA, that is something that could potentially happen. So, but like I said, watch that video that I have. Let me put this up here one last time for you. And I'll close up the video for the day. Thank you guys for watching. Like I said, join that community, talk with me and the other Discord members, see my buys and sells, and learn about that technical analysis. Now, mind you, the 12-month low, this isn't a low price. This is a low price target. So these are based on the earnings. Like I said, go back and watch that video for my stock price prediction. And there's more to it than just looking at these numbers. You need the commentary as well. It is a really solid video. Guys, thank you very much for your support, your time, your energy. To my community members who waited out my tech issues earlier this week with me, thank you so much for all your patience, and you guys were very kind. And I can't say how grateful I am for you. And to my wife, who was also very, very helpful during that time, because I could not get to the internet tools that I needed to because of my networking issues. And so she did what she could on her end. She doesn't have anything to do directly with the stock market stuff or YouTube stuff that I do, but she does a lot to support me. And so for her to jump in and take over some of that role where she was able to, I'm great. I'm so grateful for her. I love her to pieces. I am Dr. Stock, Doctor of Education. Get out there and enjoy your weekend. We'll see you in the next video.